Hey everyone, welcome back to Corporate Decoder, the place where we untangle the financial secrets of big companies and get to the bottom of what their reports actually mean for us. Today we are diving into Victoria's Secret & Company latest quarterly filing to see what the numbers tell us about their performance. The company is known for its lingerie brands like Victoria's Secret Pink and Adore Me. So first off, we see the number of shares outstanding as of late November 2025, which was over 80 million shares. This is a pretty standard number for a company of this size. Now let us look at the financial statements. This is where the story really starts to unfold. In the third quarter of 2025, Victoria's Secret reported net sales of $1.472 billion. That is up from $1.347 billion in the same period. Last year, a pretty good jump. Year-to-date sales are also up to $4.284 billion from $4.124 billion. This shows they are selling more products. Breaking down those sales figures more closely, in their stores channel in North America, sales went up by 5% in the third quarter. That means more people are walking into their stores and buying things. Their direct sales channel, which is online, also saw a 4% increase. This means their websites are doing better too, and in their international business, sales jumped a massive 34%. That is a huge growth in international markets. Now let's talk about profit. Gross profit in the third quarter this year was $536 million, an increase from $468 million last year. Their gross profit rate also improved from 34.8% to 36.4%. This means they are making more money on each item they sell after accounting for the cost of creating those items. They mention this is partly due to less promotional activity and better control over costs. However, operating expenses are also on the rise. General administrative and store operating expenses went up by 8% to $555 million. This means that while they are selling more and making more profit on products, the costs of running the business have also increased. They attribute some of this to marketing and incentive compensation expenses. All of this leads to their operating income. In the third quarter of 2025, they reported an operating loss of $19 million. Now this sounds bad, but it is actually an improvement from an operating loss of $47 million in the third quarter of 2024. So they are losing less money than before. Year-to-date operating income was $42 million, which is the same as last year. Looking at the bottom line for the third quarter, net loss attributed to Victoria's Secret & Company was $37 million. This is better than the $56 million loss in the same quarter last year. Year-to-date, the net loss is $23 million compared to $28 million last year. So while they are still losing money overall, the losses are shrinking, which is a good sign. Now, sometimes companies have items in their financials that are not part of their regular day-to-day business. One of those things here is amortization of intangible assets. This is basically the cost of things they acquired, like brand names, spread out over time. They are adding back $6 million of this expense in the quarter and $19 million year to date to get a clearer picture of their core business performance. They also had some one-time costs related to restructuring actions to improve their executive team and organization. These added another $7 million in pre-tax charges in the quarter and $20 million year to date. These are generally things they are doing to improve the company long term. There are also items related to the Adore Me acquisition. These are costs and adjustments from when they bought Adore Me business. They are showing $6 million in pre-tax expenses for this in the quarter and another $6 million year to date. When you take out these special items, they report an adjusted operating income of $0 for the quarter, meaning they basically broke even after these one-time costs. Year-to-date adjusted operating income is $87 million, which shows a healthier core business than the reported net loss. Looking at the per share numbers, the adjusted net loss per diluted share was $0.27 for the quarter. This is still a loss, but it is better than the reported loss of $0.46. Year-to-date adjusted net income per diluted share was $0.15, meaning they are making a small profit on an adjusted basis throughout the year. Now let us look at their balance sheet to see what they own and what they owe. They have total assets of $5.134 billion. Their inventories are a big part of this at $1.377 billion. That is a lot of product to sell. Total liabilities are $4.445 billion, and shareholders' equity is $689 million. Their total assets have increased mainly due to a rise in cash and equivalents from $161 million to $249 million. Inventories are also higher. Their long-term debt stands at $1.347 billion, which is a significant amount. This includes a $384 million term loan and a $600 million notes issuance. They also have an asset-based revolving credit facility which has $375 million outstanding. They are using debt to finance their operations and growth. Looking at store performance, sales per average selling square foot increased by 8% in the third quarter to $137. This indicates that each square foot of their store space is generating more sales than before. However, their total selling square footage has decreased by 2%. This means they are closing some stores or reducing the size of existing ones, possibly as part of their strategy. The company has been undergoing restructuring to refine its organizational structure and leadership this year and last year. They incurred some pre-tax expenses for these actions. Their income tax rate has been a bit unusual lately. In the third quarter of 2025, their effective tax rate was 16%. For the year to date, it was a negative 42.9%. This is mainly due to tax adjustments related to share-based compensation and other items. They continue to manage their long-term debt and borrowing facilities closely. The ABL facility or asset-based revolving credit facility maturity date has been extended to May 2030, which provides more flexibility. Interest rates on their variable debt are tied to term SOFR. The company is involved in various legal matters. One notable item is a settled class action lawsuit for wage and hour claims which they have accrued for. Victoria's Secret & Company operates as a single reportable segment. This means they are not breaking down performance by different business units, but rather looking at the company as a whole. Net sales for their US operations are $1.167 billion in the third quarter, with international sales at $305 million, showing a strong growth internationally. Now for my take on this report, Victoria's Secret seems to be making progress in turning the business around. Their sales are up across the board, especially in international markets. They are also improving their profit margins, which is crucial. The reduction in net loss and the positive adjusted earnings per share are encouraging signs. However, there are challenges. Their operating expenses are climbing and they have substantial long-term debt. The company is also shrinking its physical store footprint while growing online, which is a common trend in retail today, but it needs to be managed carefully. The increasing inventory levels also warrant attention to ensure they can sell through all those products effectively without heavy discounts hurting margins further. The Adore Me acquisition seems to be integrating but comes with its own set of accounting adjustments and potential future contingent payments. The restructuring actions show a company trying to become more efficient and adaptable. Overall, Victoria's Secret is on a path of transformation. They are showing resilience and some solid growth in sales and profitability margins. The management seems focused on strategic improvements, but a close eye needs to be kept on their debt levels and expense management to ensure this turnaround leads to sustained profitability. What do you think about Victoria's Secret's latest financial report? Do you see them succeeding in their turnaround? Let me know your thoughts in the comments below. If you found this deep dive helpful, please hit that like button and subscribe for more corporate analysis. Also join our Discord community linked in the description for more discussions. Thanks for watching and I will see you in the next one.